Sir, yes, sir, I'm waiting. Good evening, one and all. So, welcome to our revisionary class on the subject of income tax. So, the topics that we have to cover today includes salary and the house property head. So, we'll be taking up the questions. These are already uploaded, so you may download it from there. So now we are supposed to compute the income, where we all know that there are two different types of methods of computation given in the law. One is the new scheme, which is the default scheme, where now many of the benefits in the form of exemptions, deductions are no more available. And the second is in the form of the different types of benefits which are allowed, which is under the old scheme, which is also you can call as the regular mechanism of computing income. Now it becomes very important that we first identify specifically in the process of computing income as to which methodology is expected, because the answers would change, the entire computation would change. Hence, it is very important that you go through the question. Now, if something is not mentioned in this case, then as we all know, that new scheme is now the default scheme. So the same rule will continue. That is, if nothing is mentioned, then the new scheme will be assumed to be followed by the taxpayer. So let me start. Yes, very good evening, Nidhi. Good evening, Astha. So there is a question straight away from Astha. She's saying, sir, if interest in RPF comes out 12%, okay, and amount of contribution 3.5, if I'm reading it right, 3.5 lakhs, then till 2.5 is taxable at 2.5% and 1 lakh at 12%. Sir, what is the taxable contribution account and non-taxable contribution account, and for which it is maintained? Okay, Asta, I'll request that you please mention the page number from which you are raising these queries, because your queries are slightly generic. It has to be answered with respect to that particular point. So I'm sure since you have done your revision, you have a particular query relating to this particular provision. So I'll just request if you can help me with the page number. So I will directly open and read out for you so that it will be easy for me also to identify in which particular para or question you have this query. Yes, Smriti, good evening. Tanu, good evening. So she is saying page 3.40, 3.42. Fortunately, I have already downloaded the PDF. Okay, fine. So you're talking about this table, correct? Now we are talking about the treatment of various funds. So broadly, the contributions that are made in case of Provident Fund are broadly of four categories: recognized, unrecognized, statutory, and public. In public, there will be no contribution by your employer because this can be maintained by any one of us independently. And in the remaining three, your employer and you, that is employee, both shall contribute as per the terms of your service contract. Okay. Now, let me just take the point. So you were saying, one second, I'll go back to your query. Sir, if interest in RPF comes out 12% and amount of contribution is 350, then 250 is taxable. Okay. So beta, this is what I want to know. So see, basically you are taking the point from here. What is the point? That whenever any interest is credited in your RPF, then we all know there is an exemption under section 10 bracket 12 to the extent of 9.5%, and the excess of this is treated as salary. Now there is a small carve out in this. Let us go to that carve out. What is this carve out? Let me read from here. Note, interest created on contribution by such person or employee as per 1011, any payment from Provident Fund to which Provident Fund Act applies would be fully exempt. So PPF, there is no problem. Then accumulated balance due and becoming payable to an employee participating in RPF would be exempt under 1012. Now, till this point, the interest appears to be exempt as per the respective provisions. Now comes the carve out. However, exemption under 1011, 1012 will not be available in respect of income by way of interest accrued during the previous year to the extent it relates to the amount or the aggregate of amounts of contribution made by the person employee exceeding 2.5 lakhs in any PY in that fund on or after 1st April 21. And if the contribution is by such person employee is in a fund in which there is no employer's contribution, then a higher limit of 5 lakhs would be applicable for such contribution, and interest accrued in any previous year in that fund on or after 1st April would be exempt up to that limit. So what you have pointed out is correct, Astha. So if you're talking with respect to this particular point, so the basic point is that this benefit of 1012, that is up to 9.5% of interest is exempt, that is applicable to the extent, see, I read this sentence, in respect of income by way of interest accrued during the PY, to the extent it relates to the amount or aggregate of amount of contribution made by the person exceeding 2.5 lakhs in any previous year in that fund on or after 1st April. So it is saying that the exemption would not be available. So you are correct. So this 9.5% exemption is limited only up to the amount of interest which is applicable on contribution up to rupees 2.5 lakhs. Let me go to your second query. Sir, what is taxable contribution, non-taxable? And I think you are saying for this, the page is 3.42. Yeah. Now see, I think it is with respect to this part only you're talking about. What is, let me read out your question again for the benefit of all. So she's asking, sir, what is taxable contribution account and what is non-taxable contribution account and for which it is maintained? See, it is basically for this provident fund balance only. Now, what is the taxable contribution on our account and what is a non-taxable contribution account? It is connected with that 2.5 lakh point only. So we all know that now they have allowed every year contribution up to 2.5 lakhs. But understand this, that interest would be accruing in future also. So what I contribute today to my account, that is going to carry interest till the last day, till my amount is kept in that particular fund. Now, let us say, taking your example, Asta, that 3.5 lakhs is contributed in this year. Now, out of 3.5, 2.5 is eligible for the exemption and excess 1 lakh is not eligible for the exemption. So this is where I bifurcate and call it as taxable contribution account, non-taxable contribution account. So basically it is the same provident fund, but in order that, because this interest will continue even in future, so I need to identify the portion of interest which will remain exempt. It will be 9.5% and only to the extent of contribution of 2.5 lakhs every year. But this 9.5 will apply to all interest which also applies on the accumulated balance. So for that, they have made these two accounts, Asta. I hope now it is clear. Is having a question relating to page 3.12. Nidhi 3.32. Okay, I'll come to that. So, Asta, I hope your question is clear. So, 3.32, beta. What is your question here? 3.32, meaning an exemption in respect of gratuity. I did not understand, beta. What is your doubt? So, basically, If anybody is receiving gratuity, the exemption is as per 1010. If you are receiving gratuity while the service is in continuous, it is fully taxable. Then received at the time of retirement or death, then this exemption has some implication. So received under the pension code or regulation applicable to members of defense, central government, etc., fully exempt. Other employees covered under Gratuity Act POGA, not covered. Least of these three is the exemption. So I did not get better. What is your question, Nidhi? Asta is asking, sir, if that 3.5 lakhs is made in previous year, not in current account. See, Asta, this 3.5 lakhs will now be split into two parts. 2.5, which is eligible for exemption, and the balance which is not eligible. And from henceforth, this differentiation has to be continued. So whatever interest is accruing on this excess 1 lakh, that will be fully taxable. What is accruing on this 2.5 lakhs contribution in future also, that would be eligible for exemption. Yes, Tanu, I'm coming to your question. Just let me clear this. Shasta, I hope the point that you are asking or trying to get cleared is actually clear to you. You asked something 3.12, Tanu. Page number 3.12 in bracket provisions, second para. Acha, I think you're talking about this bracket, second para. Where a car is owned by employer, expenses are also made by employer. The taxable perquisite in case such car is used only for personal of employee would be equal to actual expenditure on running. But this is the normal rule, Tanu. I did not understand what is your question. So this is the provision. This is the valuation of car perquisite. So where the car belongs to employer and also the running expenses like petrol and the chauffeur or some maintenance or the regular servicing is also made by the employer. Then the perquisite in such cases would be, if it is wholly used for personal purpose, then the entire car is liable for tax. How it will be taxed? Two components have to be taxed. First, for the use of the car. Second, for expenses. For use of car, they are assuming a depreciation of 10% per annum. So whatever is the cost of car, you will take 10% per annum of that cost. This will become the value towards the car use. And plus, whatever are the running expenses done by the employer, that entire amount. This total is your taxable perquisite. So what is the issue? This is in fact the very basic provision of car perquisite. So 10% beta is for depreciation because you are using the car, na? So there has to be some taxability on the car. So what value is assigned to the car? That is the answer. Understood, beta? Anyways, in the practical question also, what we will be taking up, you will get the point cleared with a practical example. 3.59. 3.59. Can you just point out the exact point which you are highlighting? You said on this page, at page 3.59, interest is also charged on interest accrued. You are saying in the note. So note is here. I'll have to go through the entire question because I don't recall each and every question. I think it is this note you are talking about. Interest on the aggregate of following will also be chargeable to tax. Okay, 203 employees contribution exceeding 2.5. ठीक है. 527 employees contribution exceeding 2.5. ठीक है. Interest accrued on 203 excess employees contribution. अरे बेटा, if you are talking about this interest, please understand this point. This 203, that is why I said, na, remember that point, that up to 2.5 lakhs, just visualize your Provident Fund account. Now assume there are two columns in this Provident Fund account. One column is up to 2.5 lakhs and the next column is excess of that, whatever is beyond 2.5 lakhs. Now, whatever contribution is going in this excess amount, that contribution's interest is taxable, right? But this interest you are not receiving. This interest is again getting accumulated in your provident fund only, correct? So that you will receive entire thing at the time of retirement. Now this interest, which is getting accumulated in your provident fund account, over a period, what is happening? Since interest is also getting added, it becomes principal. It means you will get interest on interest. I hope you understand this. So I believe this is what is this particular point. So they are saying interest on aggregate of following will be chargeable. What is this? Interest on interest accrued on 2,03,000. So this 2,03,000 was your contribution of older period, that is 20 to 23. Now that contributions interest is also piling up every year, and you are not withdrawing any amount from this particular account. It is getting piled up and added to that provident fund balance. So that is why I said now visualize there are two balance, 2.5 lakhs, that and the interest on that is in one column, and the excess amount and the interest of that excess is in the other account. Now as the year progresses, the interest of earlier period is also now becoming as good as your what do you say, capital, correct? No, so that will automatically be taxable. Is this clear, students? Fine, Astha? Sure, great. So we also had a doubt solving session in this. Now let me take you to the practicals which we have identified for the purpose of your practice, so that you get a holistic revision of the entire chapter. So starting with salary questions, Mr. Harsh, aged 45 years, is senior executive in A Limited, and he has joined on 1st of February 24, and his scale is 35,000-3,500-65,000. I hope you understand how to interpret this. So it is interpreted like this. From 1st February 24, his per month salary is 35,000. In the next year, the increment will be of 3,500. So it will be 38,500. Again, in the next year, his increment would be 3,500. So it will be 39 and 342 and so on. So this is how we interpret this particular. This is called as the grade system of salary. So it is in the grade of 35,000, where 3,500 is per annum increment. Now, he is given rent-free unfurnished accommodation on 1st May 24, which he occupied only from 1st and 24. The company has paid lease rent of 5,000 per month. Fine. He has been provided a car of 2,000 cc capacity, which is used by him only for private purpose, and the cost of car and the monthly expenses are given. He pays lump sum premium of 150 towards his health insurance for self and wife for 48 months on 1/10/24 by account pay check. He also contributes rupees 150 towards PPF. Correct? So all these details are given. Based on the above, choose the most appropriate answer from the following multiple choice question. First, what will be the value of the rent-free accommodation? Now, if you recall, firstly, we are doing computation for previous year 24-25. Now, What is his salary package? In April 24, he was in this salary, correct? So his salary was 35,000 per month. And from February 25, he came to the second grade. So his salary became, so this is his per month salary. This he has received or he will be receiving for 10 months. This he would be receiving for 12 months. This will be his gross salary, correct? Now, how much is DA? 40% of salary and it is forming part. So along with this basic, he will also get DA, which is simply 40% of basic, and this entire is also forming part of his salary for retirement benefits. So it will also form part for other computations, right? Now, firstly, we come to rent-free unfurnished accommodation. He has been provided this, but he occupied only from 110. So our taxability should start from 110, that is October to January, and then February to March. Why did I split? Because the salaries are different. So here the salary is 35. I'm adding 40% for DA, and here the salary is 38,500 plus 40%. This is your salary. October to Jan is October, November, December, Jan, 4 months, and this is 2 months. This is your salary. 10% of this is the value of RFA. However, since this is also taken on rent by the company where the monthly rent is this, again 5,000 multiplied by 6 months, this is another value. So we have to compare both these values. One is this 10% value or multiplied by 6 months, whichever is lower, correct? Now, just for sake of time, I'm immediately going to the answer. When you do this calculation, the 10% amount over here is higher than this 30,000. So basically, the taxable value, whichever is by the rule, whichever is lower, is coming to 30,000. Correct? Anybody having any doubts with this? So my first answer would be option D. Harsh would be eligible for deduction in respect of health insurance paid. Now, even though we are not dealing with deduction chapter today, but since this is one small question, and anyways, no salary chapter question will be independent, so I'll just quickly take up that. So here he is, you are given that he has paid lump sum premium of 150 towards health insurance for self and spouse. His age is 45, so I'm also assuming spouse would not be senior. Now you have paid it for 48 months, which is 4 years. So you divide it by 4 years to get your on an average per year premium. So per year premium is coming to 37,500. And since none of them are senior, the maximum limit for this particular deduction would be rupees 25,000. Correct, no? If the person is not senior, the deduction under 80D would be 25,000. So, 1 second. Yes. Now you have 37,500, but the correct answer is 25,000, lower of the two. Is this clear to all? Next, perquisite value of car. Now for car, what is given? They have given that the car is of 2000 cc. It is exclusively for private use. 2000 means it is above 1.6 liters. Now once it is above 1.6 liters, the valuation is higher. However, since it is only for private use, we have to simply take two values. First, you are given cost of car. So for that, we take 10%, which is the depreciation. So it comes to 80,000. This is per annum. Monthly expenses is 5,000 into 12 months. It is 60,000. So my total comes to 1,40,000. So it is option D. Clear? So this will be how you will find out the answer for the MCQ question. Now, let us go to the next question. Sahil, individual aged 40 years. So again, not senior. Assistant manager in Fox, getting a salary of 55,000 per month. Now the details for 24-25 is he's getting DA, which is 10% of basic and which forms part. Then annual bonus is 60, medical 50,000. Achha, this is allowance. Reimburse medical bill, mother 6,500. Then Sahil is provided laptop, which is for both use. Then a domestic servant where the monthly salary is 8,000 reimbursed by the employer. So this is a perquisite or a benefit. पवन इज आस्किंग 140 कैसे है बेटा इधर ही वर्किंग क्या किया मैंने 80 और 60 आपने देखा नहीं क्या 8 lakhs का 10% इज 80,000 5,000 पर मंथ के हिसाब से इंटू 12 60 टोटल ऑफ 80 प्लस 60 इज 140 वैसे है ना 140 बेटा ओके कंपनी allotted 700 equity shares so this will be the ESOPs. The price at which shares are given is 170. However, the market price is 280. So you understand the difference between the two will be your value. And how many shares are there? There are 700 shares. P-tax is 2,200, out of which 1,400 is paid by employer. So this also becomes your salary. You are required to compute salary. And which scheme is they saying? Under default. Okay, this is very important. So ठीक है. So let me start with computation of income from salary. Here only salary income is asked. So we will not get into other incomes. So assessee is assessee is Mr. S. So PY 24-25, EY 25-26. Status, if nothing mentioned, you can assume R1. Now, for salary computation, default regime section 115 DSC, correct? Okay. So there is basic, there is D. Then you have bonus, medical allowance, medical reimbursement. You have annual bonus. You have medical allowance. You have medical reimbursement. Then Sahil provided laptop, domestic servant, ESOP, provision of laptop, domestic servant, then ESOP, and obligation of employee paid by employer. What is this obligation over here? Profession tax. Correct? So if all components are covered, we will get our gross salary as per section 17(1), from which I shall deduct this query. Asking for reimbursement of expenditure actually incurred on medical treatment must be in hospital maintained by government and must be in respect of prescribed disease. Yes, you're right, Veda. So for exemption, it has to be either in government hospital, and if it is in private hospital, the hospital has to be a hospital which is prescribed by the commissioner, and also the disease has to be covered in the prescribed list of diseases. Okay. So fine. Salary 55, there is no change. DA 10%. So 55,000, there is no increment. 10% of this 12 fives, 60, 60, and 660. Correct, na? Please just keep doing cross check of the workings so that there is no clerical error. Then annual bonus 60,000, medical allowance rupees 50,000. Nothing is given, so I'm assuming annum only. So 60, 50. Now, when we talk about reimbursement of medical expenses, so earlier there was an exemption up to 15,000. Now that exemption has been removed. So this amount is now fully taxable, 6,500. However, laptop, which is for personal or official use, use of laptop is exempt. Had it been um, sale of laptop, it would have been taxable. Use is exempt, right? Domestic servant, 8,000. The salary is paid by employer. So this is also your perquisite, 8,000 into 12. And market value 280, your purchase price 170, and 700 shares. So this will come to 12,806. Now 280 is the market value. He sold it to you for 170, and the number of shares are 700 shares. So 700 into 11, 77,000. Now your total profession tax is 2,200. Employer paid 1,400. So this becomes your gross salary. Now deduction, standard deduction, and under the default regime, that is a new regime, you are allowed deduction of standard of 75,000, and most importantly, no other deduction is allowed. So this will be your final answer, income from salary. Kindly make a total of this. Anybody, any doubts? Please ask. Okay, first I'll keep it on the answer page. So if anybody wants, you can just take a screenshot of this. No doubts? Perfect. Astha, both conditions are not must. When we are talking about government hospital, that is sufficient. When we are talking about other than government hospital, then two conditions have to be satisfied. First, the hospital is approved by commissioner, and second, the disease is prescribed. In that case, it will be exempt. So for government, that is no condition. The condition is only when it is other than government. See, beta, you can assume that, but if that is not given, because here first it is not treatment, here it is reimbursement of medical expenses. So if you are only going to a government hospital or you are taking the treatment, then only it is exempt, otherwise it is not. Is this fine? 9600 is domestic servant. Acha, what have I written? First, let me check the question. The question saying 8, but it is 8,000, na? So 8 into 12 is 96,000. I don't think it will be 9600. Ishapuram Kumari, it will be 96,000 only, bida. Right? So I hope everybody's doubts are clear. Asta is saying, sir, professional tax has a limit of 2,500, but bada, that is state-wise, na? And that is the limit. So anyways, your profession tax is under that. So when your profession tax is under that, there is no challenge. So maximum is 2,500. Is this clear? Any further questions with anyone? So I hope everybody is able to recall the provisions, because in case of salary, what is very critical is the provisions, because your workings are provision based. So once you recall the provisions, then the second part that is left is only applying the provisions. No problem, Krishna. There is no limit for reimbursement of servant wages. No, beta, no limit. Tanu, I did not get your question. We take only payable by employer. Yes, because see, what employer pays for you, that is only your benefit. Now, see, here in income from salary, we are taking what is your benefit. Correct? It is default tax regime. Now, right? It is default. See, default tax regime or your regular provisions, the difference is only in the deductions and exemptions, not in what will be considered as income. So whatever will be considered as income will be the same in both. But yes, when you are applying the exemption and deduction provision, there would be change in the new scheme and the old scheme. So in either scheme, whatever the employer pays on your behalf, that is what becomes your income. Correct? Asa is asking, sir, if paid more than 2,500, then up to 2,500 exempt only. Rest that is excess is taxable even if we have paid for previous years. Asabeta, firstly, don't say that it will be taxable, because when you say taxable, it means you have to add it in income. That is not correct. So if you are paying more than 2,500 in the outer column in deduction, in the old scheme, you will take 2,500. That's it. That is what it means. Don't say that the balance is taxable, because when you say the balance is taxable, it means you have to add that balance as your income. That is not the case. So if you are paying excess, fine. Up to 2,500, you will consider in the exemption, I mean the deduction. Correct? Yes, Ishan. So we have deducted standard deduction. I have put it in my answer. If you can see, I have written standard deduction. You have to deduct it while getting the final answer. I have not made, so I have not deducted. You make a total, from that you deduct standard deduction. Yes, Tanu, you're right. There is no deduction for a profession tax. So as you can see, I have not considered the deduction for a profession tax. I've only considered the deduction of standard, because we are in the new regime, which is the default regime. Correct, na? Sir, if employer paid more than 2,500, then entire, see, please understand, see, students, don't mix between what is income and what is deduction. There is a limit for deduction for profession tax 2,500, right? There is no limit on what amount the employer pays on your behalf. So let us say employer is paying 4,500 on your behalf. You'll first include entire 4,500 as your income because it is the perquisite, that is the obligation of employee paid by the employer. Correct? Tanu, where you want to take 2,200? See, your employer has paid on your behalf 1,400 in this example. So 1,400 perquisite income, that is the obligation of employee paid by the employer. Whatever employer pays, only that will be income. Now, the second question comes about is the deduction over here. Now, since we are in the new scheme, no deduction is applicable. So whatever is the amount, whether 2,200 or 1,400 or more, nothing will be considered, right? Any further questions? Good. Somebody said now clear. Asta is asking, sir, if employee paid 4,000, employee, and employee himself paid 2,000. Huh? There is some confusion, beta. Okay, employer pays 4,000. So firstly, beta, 4,000 will be your income from salary. No limit of 2,500. I repeat, the limits are on deduction. Okay, how much you can deduct as deduction or as exemption. But when we talk about considering something as your income, firstly, entire amount, whatever is your benefit, is the receipt. From that, you deduct the deduction or your exemption, and then you get the final taxable amount. There is never a limit on what will be taken in the receipt portion. So whatever is paid by the employer on your behalf, let us say you are saying employer pays 4,000, entire 4,000 will be considered. Firstly, in your perquisites, that is income. Then when the point comes of deduction, that is there, you will decide how much to be deducted. That is where you will apply all the limits. Correct, beta? Chalo then. Now, since all are through, let me take you further to the next question. Now, the next question is relating to Miss Priyanka, General Manager, Mumbai, furnishes following particulars. Just keep in mind the city names also if given, because that may help you in certain cases where city population is relevant for any calculation. Okay. Salary 40,000 per month, no increment, that's good. Medical facility and the hospital is maintained by the employer. Just keep this in mind because this becomes relevant when we are deciding the taxability. Rent-free accommodation provided. Okay. Housing loan. Now here this new adjustment has come. So you are given loan by the employer at the rate of 6% per annum starting from the year. No repayments are made. That is even better. So no much calculation required. The rate of interest of the similar loan by State Bank from the first day of the assessment year is 9.5. So we all know how the valuation works. So whatever is the difference is what is your benefit, because had you taken the loan from bank, the bank would have charged 9.5, whereas since you are taking it from loan, the employer has given you a concession by charging only 6%. So the value will be as per 3.5%. Now, some assets are provided. Here the asset is dining table, which is provided at the residence of the employee. This was purchased on this date and sold on this date. Now here, please understand, firstly, they are saying that this was provided at the residence. So first, there is use of this table for some period, and from this date, it has been sold also. So two perquisite valuations will come at the same time. One is for use and one is for sale. Be clear with this. Next, personal purchases which are done by the employee using the credit card given by the employer is 10,000 and the entire amount is paid by the company. So again, it is obligation of employee paid by employer. So it is a perquisite. Then a car is given again, which is purchased on this date for this amount and it is sold on this date for this amount. Now again, there is two perquisites, firstly for use and then from this date onwards, the sale part. And then there are some other incomes. Now you all know these incomes would all fall under other sources. Then PPF deposit is 40,000. We all know this is eligible for deduction under 80C. Compute GTI of the assessee for the financial year 24-25, that is assessment year 25-26, if she opts out of the new scheme. So now in this case, you are in the old regime. Correct? Super. So, Priyanka, computation of income. Here I'll say income because here two heads are involved. So, AY 25-26, nothing is mentioned. So I assume ROR. Now you have two choices. One, in the main format, you can only take the head, income from salary, give final amount, income from house property, give final amount, income from PGP, give final amount. Or second is, since here only two heads are involved and not much working is there, you can show both the heads in the main working. So that is your choice. Both are accepted presentations. So either one like this, income from HP, income from business profession, capital gains, other sources. Actually, our answer ends over here, but let us say a sum which is on total computation, chapter 6A, section 80C, D, whatever is applicable, and then TI and tax. Now for all of these components, you can have a working note. Like here, I'll have working note. I'll have working note. Let us say deductions are applicable. I'll have working note. And finally, for tax computation. In case any TDS advance tax is given, that you will deduct. The balance would be either the tax payable fine. Okay. Now, if I go by this model, this format, then working note 1, computation, income from sale. Sales costing, sir, what is the total amount of deduction? But a total deduction of both the persons combined will remain 2,500. You cannot take deduction twice, Asta. So it will be combined 2,500. Fine. Okay. Now in this, what all things I have? I have basic, I have medical facility, I have RFA, rent-free accommodation, concession in interest, Mm. Then you have use of table, sale of table. Mm. Correct, no? That's it. Okay, Ishan is saying it is not written car is provided to. No problem, Ishan. I just read through fast. So if it is not given to him, there will be no value of perquisite on use. No worries. Okay. Now, first, salary will come as it is. Now, first, where this medical facility is given in the hospital, which is either of government or which is maintained by employer, it is always fully exempt. Other than this, that is government and employer, if it is any other hospital that, like, let us call it as private, then when two conditions are satisfied, one, the hospital is approved, specified, and the disease is in the specified disease list. When both these conditions are satisfied, that also is exempt. So here we are fitting in the second scenario where the hospital is maintained by the employer, so it will be exempt. So 40,000 into 12, 480. This is exempt. Now, for RFA, now RFA requires all monetary salaries. Now, in this question, if you see, all these are non-monetary because they are all perquisite. So basically, RFA will be made up of this only. So my monetary salary is 480 and the value is 10%. Why 10%? As I had mentioned, you have to keep a watch on the city. So the city is Mumbai. Now, if it is Mumbai, definitely the population is exceeding 40 lakhs. So you can very comfortably take the highest percentage, which is 10%. Now, housing loan taxable rate is 3.5 and the loan is of 7 lakhs. Correct? Please do the workings at your end, student. So 9.5 minus 6. So my taxable is 3.5 into 7 lakhs. So this is 48. This I can give you. Remaining, kindly do the workings using your calci. Now, dining table was provided. So this is there for use. Motor car Ishan, when I come to that point, I'll reread. So dining table was provided at her residence. This was purchased on this date and sold on this date. So this was sold on 1/5/24. It means dining table is provided only for 1 month. Correct? So we have to take the use of dining table perquisite, which will be for 1 month. Correct now? Now, how do we value the use of asset? So when it is use of asset, the depreciation is the value, which is 10%. 1 second. The cost of this dining table is 60,000. Okay. So 60,000 into 10%. This is the depreciation. However, this is for the whole year and we are using it only for 1 month because after that it is sold. Correct? Now for sale, you have to find out the depreciated value for which 60,000 minus the depreciation. Now, there are three rates of depreciation, one for computers and electronic items, which is WDV method. Then for motor car, it is WDV method. But for all other assets, it is SLM. Now, since dining table is falling in all other assets, we will take SLM. The SLM rate is 10%, and this is for 2 years. How 2 years? Please let us see again. So what they have said, it was purchased on 1/6/21. Correct? Now, if it is 1/6/21 from that date, sorry, I think, no, I'm correct. So 1/6/22 is one completed year, 1/6/23 is two completed years, and 1/6/24 is three completed years. Now this is just before 1/6/24. So the third year is not completed. And when we are valuing this, we compute depreciation by only taking completed years. So here the third year is not completed. So we will take depreciation only for two completed years minus 30,000, which is the sale price. So this is your WDV as per the prescribed method under Rule 3 of income tax rules. And from this, we deduct the price at which it is sold. Correct? I hope it is clear to all. Now, Ishan said motor car is not provided, so I'll reread that point. Car which was purchased by the company for 250 was sold. Right. You're Ishan, you're right. So car is not provided, it is sale only. Okay. So car was purchased for 250, sold for 160. It is purchased on 1/6/22. Sorry, 16/7/22 and sold on 14/7/24. Oh, so again, the second year is not completed. So there is only 1 year which is completed. So we deduct depreciation only of 1 year. I'll just remove this. So 250 is the cost minus 20% into 1 year. This is the WDV as per the prescribed method, and minus 160, which is the sale price. So this is the value of car perquisite, the sale of car perquisite, right? Then there is one more perquisite, which is obligation of employee paid by employer because you use the credit card given by the company for making personal purchases. And the value was 10,000 and paid by the company. So personal expenses reimbursed or paid. So 10,000, right? Yes, Ishan. Unfortunately, 2 days gap only. This is where tax planning comes. So when you come at finals, Ishan, the same question would be given. And in that, they will ask you ki advise the employer or employee in such a manner that the tax liability is minimized. So if you remember, even in case of your gratuity covered, more than 6 months is considered as 1 year. So wherever any such benefits are there, which are linked with the timelines, which are linked with some limits. So over there in the question, you will advise that you extend this by 2 days or 1 month. Like even in the previous dining table, only for 1 month, the third year's depreciation was not allowed. Now see, more the depreciation, lesser will be WDV, lesser will be the taxable amount. So this is what will be asked at the finals level. So you're right, even though you are just short by 1 2 days, still they are not giving you the benefit of that completed year. So this will come as an advice from you at the final level when the same type of question would be asked, seeking your opinion of how to minimize. Ishan is asking, sir, in exam also we can show the calculations in the column. See, only where the working is lengthy, like HRA list of three, gratuity list of three, leave salary list of four. Only there you need a proper working note. If it can be shown here in one line, you can always take it. Money Vandan is saying, sir, depreciation rate of car is 15%. Okay, you're right, beta. Manivanan, you're right that the depreciation rate of car is 15%, but that is under PGBP block of asset calculation. So in block, when you are computing PGBP income for the purpose of PGBP, the rate prescribed for motor car block is 15. But when you come to salaries calculation, they have given a separate rate. In fact, in case of other assets other than car and computer, they have even given SLM. So you have to strictly follow the provisions of salary for the calculation. Correct, beta? Okay. Now, standard deduction. Hmm. Hmm. Profession tax. Profession tax. And there is one more deduction, which is, so under old regime, all three are eligible. However, these two are nil. Standard deduction would be allowed. How much would be the standard deduction, students? Ishan says 15. Again, Ishan says, the other Ishan says 50. Tanu says 50. Astha says 50. Manivannan says 50. Right. Alisha says 50. And also Kushi says 50. Excellent. Ishapuram also says 50. You all are very correct because now this is the old regime. We will be taking 50. Here, both these are also eligible, but in this case, there is no amount there. So that will not be there. So I get my income from salary, which will be put here. All these are not there. So it is nil. Income from other sources, you can do working. I'm just doing oral because there is no working required. So 7, 3, 10 plus 4, 14. So your income from other sources should be 14. However, here, as you can see, this interest is on FD of a minor married daughter. Now, since this is clubbing provision, firstly, whether this income is liable to be clubbed, answer is yes, because once the child is minor, irrespective of whether the child is married or unmarried, clubbing continues. Clubbing would be done in the parent whose individual income is higher. Either other parent's income is not given. So we will assume that Priyanka's income is higher. And in that particular case, we will be clubbing it in Priyanka's income. However, you all would be knowing that there is a deduction, or I'll say exemption, not deduction, sorry, under section 10 bracket 32, whereby so up to 1500 per child is the amount of deduction. So here 4000, which is your income, minus 1500. So your outer column will become 2500. So 7, 3, 10, 10 plus 2500. 12,500. Yes, but correct. Very good to see inputs from everyone relating to each and every point that I'm discussing. Right, students? Clear with everyone? So this is how this question is solved. Let us proceed further. Let us go to the next question now. Sir, the last point is given as deduction. Yes, but I stopped here because the question is only up to GTI. Na? So I did not go into the deduction part, but you're right. The last part of the question deals with deduction under chapter 6A, ATC, ATD, etc. So this point, if you're asking, it is chapter 6A, ATC deduction, 40,000 will be shown as deduction. I've already written here ATC. Correct? And anyway, since it is old regime, that deduction is allowed. Now, let us proceed to the next question. Now, the next question is Mr. Ram, who is a central government employee and who is working at New Delhi. Again, the place is important for the purpose of getting the population for determining certain things. Now, he joined the service on 1st Feb 21. The details of his income for 24-25 are basic 380. So directly the amount is given. no calculations required. Then the DA is also given 120, but here you have to keep in mind only 40% forms part. Both Mr. Ram and government contribute 20% only of basic under 80 CCD scheme. This is important. This type of questions are very important because 80 CCD is a very important section for exam. Next, gift received by Ram's minor child on birthday from friend 70,000. No other gift is received by him during the previous year. Okay. ठीक है. So again, this point will be of clubbing. Next, on 25/3/24. So this is the last year, not the current year. Correct? 25/3/24 is last year. We are in 24/25. Ram gifted a sum of 6 lakhs to Mrs. Ram to start a business by introducing such amount as her capital. On 1st April, her total investment in the business was 10 lakhs, which include this. Again, clubbing. This is clubbing for minor child. This is clubbing for spouse. Okay. She has loss of 130. Great. Ram deposited 70 in Sukanya 80C. He also contributed 40 in this 80CCC. Okay. He has taken education loan for his son pursuing MBA course, Gujarat University, paid 15,000 as interest. 80E. Okay. ठीक है. Which scheme, old or new? It is old. Okay. So they are saying ignore. So it means they want you to solve it by old scheme. Fine, students? Okay. The question number we are solving for one of SSC Instagram. Now this question is selected because it has so many aspects. Again, I follow the format which I suggested. So income from salary, HP, business profession, capital gain, other sources. What is asked in the question? Taxable income or GTR? Total income. So even deductions are to be considered. Under chapter 6A. ठीक है. You have a TC, you have a TCCC, and then you have a TCCT. Great. So I'll leave few lines blank. No need to keep blank. We can give working note numbers. So all this will give me my final answer, which is total income. Working note 1, computation of salary income. So You have, I think, only three items in salary head as far as this question is concerned. Okay. So you have basic, you have DA, contribution to pension fund. 380, 120, and 20% of basic. 380, 3.8 lakhs. So this is your less. You're eligible for other deductions also because this is the old, what do you say, scheme. However, there are no other payments except for standard deduction, so there will only be standard deduction. So how much it comes? 576. And standard deduction will be, this is old scheme. So 50,000, so 526. Correct. Please keep cross-checking my workings. Now, HP, there is nothing. Business, clubbing under which head? This clubbing is other sources. This is what? It's a loss from business. So this is PGBP. No CG. So CG is nil. Now, let us go to clubbing provisions. Correct now? Section 64. Now, what is the scenario, students? Okay, I have few questions. Let me first take them or else I'll miss them. Asta is saying, sir, in case of leave trial concession, employee not avail for both 2 years. Okay. Then can he get exemption in next block of 4 years for 4 leaves? No, beta. The rule is if you are not using your two exemptions in any block, you can carry forward to the next block maximum one exemption. And that also you have to avail in the first year of the next block. So let us say in your question, if you have not availed any of the two exemptions in this block, in the next block, you can carry forward only one. So effectively in the next block, you can avail total 3 leaves exemption. But this one carry forwarded one, you have to avail or utilize that exemption in the first year by taking leave in the first year. Tanu says we have ATE also. Yes, beta, we have ATE also. You are saying, Ishan, I got 339,400. What is this 339,400, beta? Please check and let me know. Actually, that is why, Tanu, I was saying I'll leave line because this happens many times that something crops up when you read the question again. Okay. Now, what are these clubbing provisions, students? Now, this is two clubbing, but since we are in PGBP, I'm first dealing with this point. So, if you remember, when any person gives anything either free or without adequate consideration to the spouse, then whatever is income generated from that free item will be clubbed with the income of the donor. Now, in this case, Mr. Ram has gifted sum of rupees 6 lakhs. Now, the clubbing provision says that when you give sum of money also, and if that money is, let us say, invested in shares or invested in FD or something, then the interest coming from that particular thing or the debentures interest or the share dividend, everything will be clubbed. However, here, Mrs. Ram has put this amount in the business. Now, when something is put in the business, it is invested in the business. Whatever are the profits of the business, that is what is getting clubbed. Now, he gifted it in the previous year, and as of this year, that is 1st April 24, the total capital was 10 lakhs, which included this 6. So, remaining 4 are of Mrs. Ram from her own personal savings. And in this business, there is a loss, not profit, of 130. Now, the law is very impartial. It is not saying that when I say clubbing, it will only be of income. The source is clubbed. Source means this source will be clubbed because all the clubbing provisions are satisfied. Whether there is income loss makes no difference. So clubbing will happen, and this clubbing will be under the head PGBP 130. Now, out of this, Ram had gifted 6 lakhs, and this loss is accruing on total capital of 10 lakhs. So this is what is the share, I will say, of loss which Mr. Ram will be eligible. Correct? So 6 13s are 6 3s are 18, 7, 78. So the loss which Mr. Ram is eligible is 78. Sorry, I'll write it in the inner column because I don't have income except salary for the time being. And salary is not suitable for setting off business loss. So let me keep it inside. Working 3. Other source income. Again, it is clubbing. Section 64. Minor child. Now, what is this clubbing of minor child? The minor child had received gift on the occasion of his birthday, and the value exceeds 70,000. Now, see, when they are saying gift, the question is whether this gift is a property, because firstly, it has to be income. Now, gift is income under section 56 bracket 2 clause 10, either if it is money or it is fitting in property. They have used the word gift, so it means it is not money, it is property. But what is that property? Because if the property is something which is not fitting in the definition of property, which is used in this section, then it will not be taxable. So this answer is subjective. Subjective on what the nature of gift is. If the gift fits in the definition of property and how property is defined for the purpose of section 56 bracket 2 bracket Roman 10, it is defined to mean capital asset. So it has to be something like land, building, shares, machinery, something like this. But if something is not fitting in the definition of capital asset, it will also not fit in the definition of gift. Okay. So I'm making an assumption. Assumption gift is capital asset and hence liable to be taxed. So firstly, it should be liable to be taxed. Once it is liable to be taxed, then the second point is it will be taxed by way of clubbing. Now the value of gift is 70,000. So it is exceeding the 50,000 mark. Hence, it will also be liable to be taxed minus exemption under section 10 bracket 32 again of 1,500. So the taxable amount is, now this can become zero if you are assuming that the gift is not a capital asset. Once it is not a capital asset, it will not be liable to be taxed. And once it is not liable to be taxed, there is no question of clubbing. So students, this is a subjective answer depending upon whether you are considering the gift as, firstly, monetary, non-monetary, that is the second point. But monetary we cannot consider because it is not given that it is money. So gift, whether it is capital asset, if yes, it will be a property. Once it is property, it will be considered as a taxable income in the hands of minor child. And once it is taxable in the hands of minor child, it will be clubbed. Now there is one more question, clubbed with whom? The clubbing provision for minor child says it is clubbed with the income of that parent whose individual income is higher. Now in this sum, fortunately we have some details of the other parent's income, that is mother. But the interesting fact is mother's income is a loss. So we have already taken our share of loss. So remaining loss is mother's share. So anyways, her income is in negative. So definitely it will be clubbed with father only. So 68,500 will be the other sources income. Now, since this person has 68,500 in other sources, so out of PGBP loss, he can only set off 68,500 because that will get set off against his other sources income, because you cannot set off business loss against your salary income. I'm sure you all remember this. So I will only consider 68,500 here. And again, I will write a note below that the balance amount I'm carrying forward to future years for being set off, and I have 8 years time limit to carry forward this as per provisions of section 72. Correct? So eventually, finally, my GTI will be 526. Correct? Yes. Okay. Now Sukanya Samruddhi 70 and contribution to annuity plan 40. 70, 40. Now we all know we have a maximum limit of 150, but that maximum limit will be used even for 80 CCD. If you remember, 80 CCD has three parts, two parts for your own contribution, one part for employer's contribution. So let me just work out. Before that, this he has taken education loan. So 15,000 is interest, which Nidhi, I think, had highlighted that there is one more deduction. So let me take that deduction of 15,000. Now what is left is this. So working note 4. Now, first is your own contribution. Now we all know for this there are two subsections, 1B. 1B gives you that extra 50,000, where one of the views which is also accepted in many places is that it is having only the limit of 50,000. Then your own contribution, which is under 1, it is having two limits. One is the limit which is given to your contribution, that is 10%, plus the overall limit of 1,50,000, which is applicable for ATC, CCC, both. So now there are two ways of doing this. First, you take your contribution here to the extent possible, and balance you can take here to the extent you require, or you can start from here and balance you can take here. So both ways is allowed. Let us first see what is given in the question relating to your contribution. So 20% of salary is the contribution. 20% of basic, 38, 20% is 76. So up to 76 I'm allowed. Okay. So firstly, how much is contribution? Contribution is 20% of basic only. Basic is 3,80,000. Correct? Now what I do is I first use the 1B, own contribution, which is 50,000. Then I'm left with 26,000. Own contribution, I'll say additional limit. So I use 50,000 in 1B. Now I'm left with 26,000, which I can use for 1. Now there is a maximum limit. 10% of basic plus DA forming part. Correct, na? DA is 120, but how much is forming part? 40% is forming part. Okay. So am I right, students? Please cross-check my workings. See if whatever I'm considering is going right. So I have a maximum limit of 42,800. So even this 26 is eligible. So in short, my entire 76 becomes eligible. So this is eligible under subsection 1, own contribution under, chalo, theek hai, that I will separately. Then I come to employer's contribution. How much is employer's contribution? Employer's contribution is also 20% of basic. So it is 76,000. Now here my employer is central government. So maximum limit will be, anybody can tell me what is the maximum limit? Good. Pooja, correct. Anu, correct. Anybody else? What will be my limit here for employer's contribution? How much can I claim? Ishan, good. Anybody else? Asta is giving me answer. Yes, good. Asta. Okay, then y'all who have given me right answer, give me the amount also as per the limit. So as rightly pointed out by all these students, my limit is 14% of basic plus DA forming part. So you have to take 14% of this 59,920. Asta is saying, Tanu is saying the same. Ishan is saying the same. So 59,920. Correct. So my total deduction under section 80 bracket 2 is this, whichever is lower. So now let me just put it here. 80 CCD 1. How much I have in 80 CCD 1? 26,000. Subject to maximum limit under section CCE, which is 150. Correct? Now total of these three compared with 150 outer column. So students, 7, 4, 11, 136, please confirm. So 136 is what I'm getting here. Then 80 CCD 1B and 2. 1B entire 50 and 2 59,920. Mhm. Even and from where are you getting 14% as 136, beta? What is this 136? Tanu? What is this 136? What is this 136 you all have put? Manivan and Tanu. Acha, total deduction. Fine. That you can make a total. I will not put total. I've already done the 136. Okay, fine. Yes, Asta has a good question. I think the same question was asked by one more person. So her question is relating to this clubbing. So in clubbing, you have a deduction of 1,500 first. And in case of gift, gift is considered as income if the value exceeds 50,000. Now, this same question was asked by someone else. So let me take an example. The value of gift is 51,000, let us say. And let us say this is the gift received by your minor child. So clubbing is also applicable. So you have 1,500 as deduction. Now the question is, if you deduct 1,500, the value becomes 49,500. So the question asked by Asta and one more person, I'm forgetting the name, but I saw in the chat, I thought I'll take it at the end, that in this case, what will happen? So students, please understand how to look at the provisions or how to interpret. See, the clubbing provision is coming later. Firstly, we have to determine whether anything is income. And while determining this, either you apply Section 10 exemptions or you apply the limits. Like here, in case of gift, the limit is 50, and only if the amount exceeds 50, you consider it as income. Now, here, when I look at the provision under Section 56 bracket 210, gifts are income when they exceed 50. This part will come very much later because firstly you identify whether it is income or not. And as per 56 gift will be income if it exceeds 50. So it becomes income first. After that, you see who received the gift, whether a minor received, whether a spouse received, or anybody else received, and whether clubbing is applicable. And then you conclude that, okay, clubbing is also applicable. So even 1,500 deduction is also applicable because it is clubbing of minor child. Now, in this case, your taxable amount becomes 49,500, but now it will again not be compared with 50,000 because that stage is crossed once you identify or compute the income. Like, let us say we talk about salary. For example, salary has to be clubbed. Example, though salary will never be clubbed because it is out of efforts, but just for academic purpose, let us say salary has to be clubbed. What you will do, you'll first compute the salary income by allowing all deductions and exemptions of salary head. That is, you'll find out income from salary first. And then you will see the clubbing provisions, and wherever applicable, you will club. And if it is minor child, you will deduct 1,500 also. So point is, first you identify income as per the respective head's provision. And once income is identified, then you go for the clubbing provision. And here in clubbing, if there is 1,500 exemption, that will be subtracted only at the time of clubbing. So in this case, in your example, had the example been like this 49,500 would have still been clubbed and would have been taxable under the head other sources as gift, even though the amount is below the threshold limit of gift. And this will be your final taxable income. Is this clear to all students? Any questions here? So I've answered every one of you. Okay? Excellent. We'll take a 10 minutes break and then we'll come back and solve the other questions. Let us proceed, students. Anybody has doubts, please feel free to ask. There is a question: in case of leave travel concession, all family members of individuals must be wholly mainly dependent. Yes, only then their expenses are also eligible. So if an employee has 25,000 income from one employer and 30,000 from other employer, for the purpose of classifying and specified, you include both. So the income from both employers is considered for, it is basically, in fact, you consider the income from salary. So by default, when you are calculating income from salary, it includes income of both. So both will be considered for determining whether the employee is a specified employee. In case of traveling touring, it is not written in book that if any member is accompanying such employee on official tour, then expenses if recovered from employee will be deducted. Please tell that will be deducted or not. Okay. Please understand, beta. See, the traveling touring which is eligible deduction, which you mentioned specifically, official tour. Remember one thing, official tour cannot include any member of your family. See, your family member may be accompanying. For example, let us say I'm going on any official tour to some northeast states, which are also very beautiful states for a trip and a vacation. Now, in this particular case, let us say my wife accompanies me so that I can work, and then on weekends we can have a good vacation together. In this particular case, even though I'm on official tour, whoever accompanies me can never be considered for official purpose. That will always be personal. And if employer is bearing the expenses of my family member, it will always be taxable. Yes, Ashtam. So once you are specified employee, you are specified employee for both employees. Ishan, you may please mention your question so that I can answer here itself. So whatever is your question, you can mention here, Ishan. Great. Let us proceed, students. So Krunal, aged 27, employee in a private company, again, city important. He was appointed on this date in a scale of 6170. So, 1st Feb 23, his per month salary is 60. 1st Feb 24, it is 61. 1st Feb 25, it is 62. 1st Feb 26, it is 63. So I've put all the things that may be relevant. We'll check what is relevant, what is not later. He furnishes you the following information for the previous year, 24-25. DA, 25% of basic, 60% farming part, bonus equal to 1 month salary paid in November. Wow, something different. So bonus is 1 month salary paid in November on basic salary applicable for that month. Okay. We have to consider bonus taking the November month salary, whatever it is. Okay. Leave encashment for this year is 10,000. He also received motor car. Okay. Words are important. Received motor car for both. So this is use of car, correct? And all expenses are met. Fine. So it is only use, not sale. Then employer granted him a loan. So this is interest-free loan. Repayment is there. So we have to do working. ठीक है. Employer gave him rent-free accommodation, Delhi. From this date, the house is owned by the employer, perquisite value. Wow, super. So for the first time, we are getting this adjustment. Super adjustment. Good. And then his colleagues gifted him mobile worth rupees 45,000. Okay. On account of his marriage. Super. Acha, only income under that salaries is asked. ठीक है. He wants to pay tax under the default tax regime. ठीक है. So with this details. So computation. Oh, no. Basic is there. DA is there. What else was there besides basic and DA? Bonus, leave salary, use of motor car. Interest, concession, 9.5, 5.5. Okay. All right. Concessional interest. RFA. Anyways, this mobile phone will not come, and even if it would have come, it would have come in other sources. So salary, no question of this coming here. ठीक है. So this is your gross salary. So standard, and you're also eligible for profession tax, etc. But that is not given again in this sum. Okay. So let us start. Now for basic, which scale we have to adopt? We want from April 24. It is 61, correct? And then from February 25, it is 62. So my basic is April to January, 61 and 62. Correct? So what period is April to Jan? 10 months, 2 months, 61 into 10, 610. 62 into 2, 124. 124 plus 610 is 734. DA 25%. Please tell me this amount. 25 is divided by 4. 4, 1, 3, 3, 4, 8, 1 8 something should come. Okay, just tell me that amount. I'm not spending time on calculation. Bonus salary 1 month of November. November, na? What was my salary in November? November 24, it would be 61. Correct. Leave salary received during employment is always taxable, so entire 10,000 is taxable. Okay, I have many messages, maybe people are giving me. Ishan, we can take it then at the end, beta. 1010B wages are only considered that are paid in money form. Okay, beta. 183,500, 183,500, 183,500. Okay, okay. Thank you. Thank you, everyone who have posted the answer. Now, use of motor car. The car is exceeding 1.6. Great. Along with chauffeur. So we have to take the value for chauffeur, and it is for both purpose. The car is of employer. Expenses are also by employer. Now, if this is a big car, the value will be taken as 2,400 for car plus expenses plus for shopper 900. Now, multiplied by number of months. So, what is this period for which you are given this car? He received the motor car on 1/12/24. So, from December. So, December to March, 4 months, correct? So, tell me the total amount, students. This will require working. This will require working. Calculation of concessional interest. Now, firstly, what is the taxable rate? The taxable rate will be the SBI rate 9.5% at the start of the year, correct? Minus the employer rate 5.5%. So it is 9.5 minus 5.5. So it is 4%. Now, what is interesting in this question is there is repayment. Now, whenever there is repayment, we have to take the closing balance of each month. That is what is the outstanding to be considered, and monthly interest has to be computed. So the loan granted is of 2 lakhs on 1st June 24. Great. So anyways, the calculation will start from June onwards. So we have to find out balance on the last day of every month. September, October, November, December, January, February, March. So last day. Quarterly installments. Starting from 1st October. So firstly, how much will you be paying? So they are saying you will be repaying in equal quarterly installment. Quarterly means 4 and in 2 years means 8. Correct now? So you have to pay this over a period of 8 quarters. Right now? And if it is 8 quarters, 2 lakhs divided by 8 quarters. Correct? So 2 lakhs divided by 8 quarters will be 25,000. Yes. Manivanan has also given me same answer. So 25,000. And this starts from 1st October. So now my repayments are like this. First repayment is 1st October, October, November, December. Then next repayment is 1st Jan, 1st April. So all these are repayments. So 1st October of 2024, then January and April 25. Okay. And the amounts are 25, 25. Fine. I hope I'm interpreting it correctly. So June to September, my outstanding remains 2 lakhs. 2 lakhs. 1st October, I would have made the repayment. So October to December. Again, 1st Jan, I would have made the repayment. So just confirm, students, if my interpretation and understanding of this is correct. Yes, according to me, this is right. Now 4% is per annum. So upon 12 months into 4 months into 4% upon 12, right? Yes, Tanu, starting from October. So 1st October I have repaid. Now I want balance on the last date. So 31st October my balance has reduced, na? Correct, na, beta? Done. So this will be my total value of this interest perquisite. Valuation of rent-free accommodation. Now, employer gave him RFA in Delhi from 1st April 23. So 23, 24, 24, 25. Okay. This house is owned by the employer. Fine. Perquisite value of this in the last year was this. How this will be used, that we'll see later. Accommodation is continued to be provided by the employee in the current year also. Furniture and appliances provided with the house were bought at the aggregate cost of 150. Okay. Electricity, water bills. Okay. See, again, besides RFA, there is a reimbursement of electricity and water bills, which is separate than RFA. Correct? How much it is? 5,000 per month. If it is 5,000. Okay. I think you gave me this answer as 13,500, right? So in your chat where you all have written 13,500, I believe it is for this only. You're right, Tanu. Yes, Tanu. Correct. I have done the same thing. 5917 is what people are giving me. How much? 5917, no? Mm, this is 13,200. This is 5917. Only RFA is left. Okay. Now, how do you value RFA? So many chats. It is difficult to keep a track. Asta is saying, sir, if it payment not reimbursement of electricity bill, then we have to see for a specified employee. Yes, you're right. But better if understand, Asta, you're right, but understand this. The house belongs to the employer. So by default, the expense is of employer only because the bills would be in the name of employer only. So it will be specified employee case only. Anyways, the salary itself shows that you are a specified employee. So don't worry for that. It will be specified employee because specified employee limit is very less. Okay, somebody has suggested me correction, sir. It is 5719. I've just written it ulta. Chalo. So now going to the most important part, that is interest, not interest, RFA. Now, how to do valuation? Now, once house is owned, you have to see the population. If it is Delhi, so no need, population would be exceeding 40 lakhs. If it is exceeding 40 lakhs, the value will be value of unfurnished will be 10% of monetary salary. Correct? Here in RFA, we consider monetary salary. Student, what is this? Is it 5719 or 5917? I'm getting different figures by different people. Somebody saying 57, somebody saying 59. 5917 or 5719? ठीक है, ठीक है. Now for RFA, we have to take monetary salary. Now what is in monetary? Basic, DA forming part, bonus, leave, salary, all these are monetary. This is not, this is not, this is not. So basic plus DA forming part plus bonus plus leave salary. %, 60% forming part. So students give me the forming part DA, 60% of this, 61, leave salary 10. Ishan is saying 1,10,100. Gulika is saying the same. Mani Banan is saying the same. So 110, 100. So what is the total then? How much is my salary? So what is the total of the students? 915, 100. 915, 100. Okay. So value of unfurnished will be 10% of this. So it will be 91510 plus furniture. Again, we take depreciation, which is 10% of. What is the cost? So it is. So my total value will be 9 and 10. 106,510. Right? But now the best part. Now there is a proviso which says that where RFA is continued from earlier period, the taxable value shall be max. What amount? The taxable value shall be max, the value computed on the basis of previous year's taxable value. Now here they had given you this previous year's taxable value. Last year, how much was taxable under this category of RFA? 92,000. So they are saying the maximum amount that can be taxed is maximum. What? 92,000, which was the taxable value last year. And now you have to index it. Index it, how you do for capital gains. So this is the last year's value. 92,000 is the last year's value. As you can see, it is of 23-24. So divided by 23-24's indexation rate, that is 348, and multiplied by the correct indexation rate, which is 363. This should be the maximum which will be taxed as per the special provision carved out of this RFA valuation. How much it comes, beta? 95,965.5. Okay, Tanu gives me this 95,966 same. Manivanan. Gulika same. Khushi same. Pooja same. Keshapuram same. So it is same. 95,966. Now, my value as per the provision is coming this, but the special carve out provision says this is the maximum. So by default, I have to take 95,966 as the final value. Right, students? And since we are in the new scheme, correct. So this is my final answer. You can take a screenshot if anybody wants. I was also saying something, correct. Yes, Asta. Your previous question, if the employee is not satisfied, specified, then it will not be taxable. But see, Asta, 50,000 is nothing. Any employee will become specified. 50,000 is the limit to treat that employee as specified, right? So 50,000 anybody will cross. We have to anyway see his total income from salary. So that is very easily crossed, right? Okay, students. So we have thoroughly covered salary. Ishan is saying, sir, that question is similar to this RFA, but they have not considered the CI in the solution. So I would like to know why it has not been done. Yeah, because I don't know better that question. You have to give me the question because then you have to see firstly two things. When is this provision amended, included in which paper you are dealing with, whether this provision was there in that particular year. This is not there originally, it has been later on added. Second, Ishan, what you have to see is that this is applicable only when it is continued. The RFA is continued from the last year to this year. So both these have to be checked before you can conclude why it was considered or why it was not considered in the question that you are referring to. Correct? Okay. Let me take you to house property. Now, this is a very interesting question. So I selected it here for vision. Mr. Manish is a real estate developer. His business is constructing and selling. He named the project as Ashiana, which has both residential commercial. He obtained the completion certificate on this date. Majority units are sold. However, 15 of residential, 10 of commercial are still not sold. So they are stock in trade. Now, to earn some income from such units, he lets out, very important, he has let out 10 of residential, 5 of commercial from 1st May. And then values are given. Now, firstly, recall the special provision under section 23(2), which says that in case a person is engaged in the business of selling real estate properties, that is house properties in our case, then that person is given a benefit of not considering their properties as deemed to be let out. What is that? In the from the year of completion. So year of completion is this. So from 31st March 23, that is a financial year end when the construction was completed up to 2 years. That is 31st March 25 deemed to be let out. His properties will not be considered as deemed to be let out. Right? Completion, yes, Manivan. So it is from the end of the year in which completion takes place. Correct? So I'm putting the timeline because theoretically, if you say 2 years, 48 months, that will not be helpful. Let us put it in proper date terms. Now, now, one thing is for sure. In this case, the properties are not deemed to be let out for the simple reason that the properties are not deemed to be let out up to this date and our financial year will end on this date. So we are safe as far as deemed to be let out provision is concerned. Now our income will be taxed only for the actual let out properties and not for deemed to be let out properties. So actual let out properties are 10 of residential, 5 of commercial. So we are going to compute our income in the normal fashion. So GAV 15 actual, 14 expected. So 15 actual into 12 months into 10 because there are 10 properties, correct? And out of this, expected is more. So for commercial, 22 into 12 into how many commercial properties? 5 properties. This is your GAV minus 30% because other things are not given like municipal tax and all. This will be your income from HP. Just calculate it and let me know. So 15,000, whichever is higher, actual and expected, 15 is higher for 12 months because it is per month into 10 properties. Then 20 and 22, whichever is higher. So 22 is higher into 12 months into 5 properties. Now, what is the question? How much amount would be taxable in respect of income earned by Mr. Manish for let out of residential under which head? Okay. Head, I think there is no doubt it is HP head only. Correct? Yes, it is HP head only. Now, as far as amounts are concerned, I think you are the best judge because you have your calculators. So I've given you the workings 15 into 12 into 10. This is GAV minus 30%. This is your income. Again, 22 into 12 into 5. This is GAV minus 30%. This is your income. Students, let me know. So see, this and this are not correct answer. That is for sure. The only thing left is these two. Just check any one. Even if you get answer, one of the answers, 155, 847, 155, 770. So you have to check any one. Check for the commercial because commercial is what is changing in both. Huh? 126, 924. Tanu, we don't have this option. Rent from 1st May, 1st May, 1st May. Sorry. Thank you, Manivan. Rent is from 1st May. Thank you. So 11, 11, 11, 11, 11, not 12. Sorry. Thank you, Manivan. Sorry, should just correct. Asta, firstly, how employer will come in tenant case? So if it is tenant, it will be landlord, na? How can there be employer and tenant, Asta? Okay, Manivanan is saying answer is A. A. 11 months. Pawan is saying B. Others have said A, but Pawan is saying B. You have to only check commercial. Commercial, right? Everything right. But it is deducted in the year in which it is paid to the authority. So if you have paid in 23-24, you'll get deduction in 23-24. So the final answer is answer A. Great. Now, what would be your answer in the first question if Manish is not a real estate developer? Ah, ha, ha, ha. And he is in the business of letting out the properties. What will be the difference, students? He is in the business of letting out of properties. Now, once you are a business of letting out, the head will change. How the head will change? Letting out business. Now, if the letting out is of residential, it will be HP. Letting out of commercial, it will be PGBP. So firstly, I'll strike out what options are not applicable. Residential PGBP, commercial PGBP. No. So only one option is there. Because residential will be HP, commercial will be PGBP. But then we don't have to check the calculation, students. See the fun. Because of the heads, first three options get strike out. And since the first three options get strike out, we are only left with the last option. So that becomes the answer automatically without going into the details of calculation. No PGBP. Whoever is saying PGP for both, that is not correct. See, I think you all have forgotten the exception. The exception is for residential properties, even though you are in the business of letting out, still residential continues to be under the head HP. Only the commercial will go to the head PGBP. So the answer cannot be PGBP. It has to be HP for residential and for commercial only PGBP. Correct? So by default, it is only option D which is left. So I need not even go to the calculations. But still, for our understanding, let us say, again, like the previous scenario, there are two options with correct heads and the amounts are different. Now, what is to be noted here is that once this, because this is commercial, this goes to PGBP. The difference will be, firstly, we will take 20,000, which is the actual rent, because now GAV will not apply. Secondly, there will be no 30% deduction. So for first HP calculation, which is for residential properties, the calculation continues, it remains same. But PGBP, which is for commercial property, two changes. Now GAV is not applicable, so we'll not take whichever is higher. So it will be only actual rent, because in PGBP, we don't take GAV, that is actual or expected, whichever is higher. Second, there is no 30% deduction, there is actual deduction. Now, technically, there has to be deduction of depreciation, repair, maintenance, but those values are not given. So our answer will be simply 20,000 into 11 months into 5 properties. This is for the commercial part. And I'm sure it will match with answer D. But luckily, we did not require this calculation to be done to reach the answer, because as per the heads, A, B, C are already out because they are giving wrong heads. The only right head is D. Correct? Good. So answer D is correct. Now, what would be the tax treatment of vacant residential and commercial units held as stock in trade? Why are they asking for vacant? We have already seen na, that there is no tax treatment. Why? Because it will not be taxed, because up to 31st March 25, there is no taxability. So answer is the answer, because 2 years have not lapsed. Correct? So for this, where they are asking what would be the tax treatment of vacant, A is your answer. Right? Let us go to second, because third is copy of second. I could hardly find any specific question on HP. I could only locate this three questions, out of which second and third are copy paste. Only they are found in different materials. So I just copied it here. So even if you solve second, third is just change of figures. Everything else is same. So Kushal is a resident. Now this is important. You are RNOR. So now you have to go back to the residential status chapter to identify what incomes are taxable of RNOR. Now for RNOR, only foreign incomes are only Indian incomes are taxable. Foreign incomes are not taxable. There are only two foreign incomes which are taxable for RNOR, where business or profession is outside and the profession was originally set up in India, or the business is controlled from India. Other than that, no foreign incomes are taxable to RNOR, only Indian incomes are taxable. What is Indian income? Either earned in India, or deemed to be earned, or received, or deemed to be received. Just keep this in mind. Now, following information is furnished in respect of house properties. You are having two houses. One is outside India, one is in India. So this will anyways be taxable because the income is earned in India. This will be taxed because this income is earned in India. Now only we have to check for this, because this is earned outside. Now we have to see where it is received. If it is received also outside, the taxability is gone. But if it is received in India, then only the taxability will be there. Now for New York house, it is said that it is let out at monthly rent of $5,000. And interesting part is the entire rent is received in India. So the rent is received in India. So because of this, this income becomes Indian income because of receipt in India. So as per section 5, for RNOR, even this income would be taxed. Now what are the property taxes paid? 1250, 750. Great. So we can do calculation here. GAV 5,000 into 12 is 60,000, minus municipal tax, total of this to 2,000, minus standard deduction at the rate of 30%. This will be income from HP. But remember, this is in dollars. Now we have to convert it into rupees. That is by multiplying this by 81. Because the conversion rate is 81. So this is your first computation. The second is the house in Ahmedabad. This is anyways Indian income, so this has to be considered. This income, oh, the house is self-occupied. Great. And on that, you have taken a loan of 30 lakhs. Wow. So September 19 at the rate of 10%, the construction was complete. Wow, wow, wow. So you have pre-construction, everything. Was June 21. Beautiful. Entire loan is outstanding. Property tax paid is 2,800. Now see, This is your working for the income, which is of the house in New York. Now, for the house in Ahmedabad, see, everything will be nil. GAV, municipal tax, NAV, everything will be nil because it is self-occupied. Only interest on loan will be allowed up to maximum of 2 lakhs. Now, for this, we have to make computation of pre-construction interest. Now, pre-construction interest will start from the date of loan, 1st September 19, up to 31st March, immediately before completion of construction. When is construction completed? 31st May. So we have to take 31st March 21. So this is the pre-construction. How much period this is? 19 to 20 September. So this is 1 year and 7 months, students. Just confirm. So we have to find out the interest, 30 lakhs into 10% into this period of 1 year, 7 months. 1 year, 7 months means 12 plus 7 is 19 months, correct? Upon 12 months, because this is 10% is for 12 months, correct? So 3 lakhs, 3 lakhs. Please give me this amount. 475, 475. Okay. Pre-construction. So we have to take 1/5 of this. How much is this 1/5? 95. Great. So my 1/5 comes to 95 plus my current year interest. Now this is pre-construction, right? How much will be current year interest? Because the entire loan is outstanding, it will be 30 lakhs into 10%, it is 3 lakhs. So my total interest is 3 lakhs plus 95. Correct, na? My total interest is 3 lakhs plus 95. Students, please confirm. Now, what is the maximum limit? After so many chats, difficult to keep a track. 2 lakhs. Okay. Perfect. So, students, now first the old scheme or new scheme? Boss, first that is important because if it is old scheme, you'll not get, sorry, if it is new scheme, you'll not get 2 lakhs. So which scheme it is? Yes, he has opted out. Good. So since it is old scheme, your final answer would be New York, whatever is the income, Ahmedabad, this 2 lakhs loss. This will be your final HP income. Anybody calculated this New York income? So first 58,000 minus 30% of that, that is your HP income in dollars, multiply by 81, that is your HP income in rupees. Somebody is telling me 30 lakh 88,600. Acha, okay, so you are giving me this figure 30,88,600. Nahin, 32,88,600. Okay. Many people are giving that answer 32,88. So I presume 32. So 32,88,600. So my final HP income is 88, 600. But had it this been the new scheme, I would not have got this 2 lakhs. Then my income would have been 32, 88, 600. Yes, Asta, you're right, Bida. Great. So students, these are the various types of questions. I tried to compile to cover the questions which has all basic to different special types of adjustments. I'm sure this will help you in revising the whole chapter thoroughly. So from my side, I have taken all possible adjustments still. I'll ask you all to go through your respective modules, past exam, MTP, RTP questions, so that you get a thorough practice of these chapters. But yes, I should appreciate that the way you all responded, it shows that you all are very much into the subject with a good command on the subject. Yes, here and there, some provisions, that is fine. Even I made some silly mistakes because that happens when you are in pressure in exam, and plus so many things to be kept in mind. So one or two things may slip. So don't worry. Remember one thing, you are not given marks for final answer, you are given marks for each step. So even if your final answer is wrong because any one of the workings are wrong, but for other workings below and above that, you get the step markings and you get the marks. So don't be unnecessarily worried or bothered that, okay, my final answer was wrong, so I will get 0 marks. It will never happen in our professional exams. So students, this is all from my side. Yes, thank you very much all. I thank you for appreciating the practice. Yes, this is what is our attempt at BOS to provide you the maximum possible support in whatever best possible manner. Yes, Ishan.
Good evening, sir.
Good evening, Ishan.
Sir, that question I was telling,
Yes, beta.
sir, in that the RFA is given from 1st April 2019 and we have to calculate the salary for assessment year 24-25. But in the answer that I saw, they have not suggested answer, they have not calculated the CII.
Beta, if you are seeing suggested answer, please check whether the suggested answer is updated for current year provision, because generally suggested answers, which I understand, are answers of that respective exam, correct?
Yes, sir.
In that particular case, if the suggested answer is of that respective exam, it will never be amended for current provisions. So that is what I was saying. There is a possibility, because see, this wasn't there originally, right? It has been amended and brought into the provision, right?
Yes, sir.
So there is a possibility that since the suggested answer is as per that year's provision, not updated for current year. See, that is why RTPs and all are more helpful. Not even RTPs. I don't recall, but generally a particular this material you can refer because it is updated for all the current year provisions. But if you see the past exam questions and the suggested answers of those years, you will not get the correct answer in few cases because there are amendments like this.
So,
So that
but
is
this
why.
one is for September 24 only. So the amendment came before that only, no?
Nee,
Or
nee.
after?
When did the amendment come? I frankly don't remember the year, so I cannot comment on that immediately. I'll have to see the act to see where when the amendment had come. So I don't recall, frankly, Bida.
Sir, in September 1, they had done 15% of salary one also. That
No, no.
was earlier.
Somebody saying Jan 25. Bapre. No, it cannot be so late, Jan 25. I don't know. That's why I'm saying I'm not recalling Bida the date of amendment. So see, Ishan, if it is not answered that way, the only reason which I can foresee is that the amendment may not be there, Bida. Please go and check the date of amendment. Na?
Okay, sir. So, sir, in the exam, we have to do that, no?
See, anyways, now if you are talking about today, you have to do it. Simple.
Yes, sir. Yes, sir.
So if
That
you
was only.
see, don't worry. So now you have to do it better. So that
Okay, sir.
I'm sure it would be only because in that period, acha, it may also be possible that the exam was the question. But I'm very sure it would be only because of the amendment reason. Don't worry. You do it now, and that answer is also correct as per that year's provision. Don't
Okay,
worry.
sir. Yes, sir.
Fine.
Thank you, sir.
Yes, madam. So thank you all. I really appreciate the manner of your response because it shows your first presence, your involvement in the entire session, and also that you all are already pre-prepared with the chapters. This is the best way of revising with us. So thank you all. Thank you very much. Please keep revising and also be in touch with the subjects. You will score the best marks. The only requirement is, especially for subjects like taxation, you have to be in continuous touch so that the revision or the provisions are getting revised regularly. Fine. So that's it. That is all from my side. Thank you all, and let us catch up again for the next class for the next topic. Thank you. Thank you very, very much. Yes, Manishi. Thank you very much. Good night, Manishi.